Hello everyone, here are the latest market news on September the 16th, 2019. Oil prices rise amid attacks on crude facilities. Oil climbed to 4-month highs on Monday after weekend attacks on crude facilities in Saudi Arabia, which sparked supply fears and removed about 5% of supplies. The United States blamed Iran for the attack. Brent crude futures rose nearly 20% early in the day, and U.S. futures surged almost 16%, both hitting their highest level since May. But prices lost some gains after U.S. President Donald Trump authorized the use of the country's emergency stockpile to ensure stable supply. International benchmark Brent futures advanced 10% to $66.31 per barrel, while U.S. light crude soared 9% to $59.82. Trump also said the United States was locked and loaded for a potential response to the strikes on the Saudi facilities after a representative of President's administration said Iran was to blame. Amid this, fears about Middle East tensions and worsening relations between Iran and the United States supported safe havens assets, with gold added 1% to $1,503.4 per ounce. China continues to report weak economic data. China continued the release of data showed slowdown in country's economy in August, with growth in industrial production in its weakest 17.5 years amid heavy trade war with the United States and softening domestic demand. Industrial output growth unexpectedly fell to 4.4% year-to-year in August, marking the slowest pace since February 2002, and receding from 4.8% in July. Analysts had forecast an increase to 5.2%. Meantime, the value of delivered industrial exports decreased 4.3% on year, the first monthly decline since at least 2 years. This is reflecting the toll that the escalating Sino-US trade war is taking on Chinese manufacturers. Data released on Monday showed retail sales and investment gauge also worsened, reinforcing views that China is likely to cut some key interest rates this week for the first time in over 3 years to prevent a sharper slump in activity. Growth of H&M sales slows in July and August. Sales growth of one of the most famous fashion retailer, Hansen Moritz AB H&M, slowed in the key July and August month, hampering the Swedish company's attempt to end a 3-year drop in earnings. Sales growth probably weakened to 6% in those 2 months from 12% in June, Berenberg analysts said. Based on calculations from figures H&M reported on Monday, the company's share slumped as much as 3.2%. H&M has been trying to reduce its high inventory level, which stood at 40 billion kroner or $4.2 billion at the end of June. The retailer has struggled in recent years as its clothes fell out of favor with shoppers, and it launched a plethora of new formats. Ostrom suggests shareholders to sell shares to AMS. German lighting group Ostrom advised its shareholders on Monday to accept a €4.3 billion, $4.8 billion takeover bid from AMS and sell their shares to the Austrian sensor specialist, saying the offer was economically attractive. AMS launched its €38.50 per share offer for the company earlier this month, beating a rival offer from private equity investors Bain Capital and Carlyle Group by 10%. German group had initially backed the finance investors' offer, who had agreed to maintain Ostrom as an independent company with its current management and to support its strategic direction. However, the financial attractiveness of the AMS offer was to be weighted higher than points of criticism. According to latest filings, the biggest Ostrom shareholders, AMS aims to convince our alliance global investors with 9.4% of the stock, UBS with 6.2% and Barclays with 5.5%.